Hello, Forex enthusiasts. Today, I will share a practical strategy for making profits on intraday trades. If you are new to Forex or want to improve your existing strategies, you are in the right place. The markets are constantly changing, and adapting to these changes, a war, is the key to success. Let's explore this strategy together and take the first step to increase your profits. If you don't get bored at the end of the video and you like it, please don't forget to subscribe to the channel and like my posts. Let's get started. Analysis tools and indicators. I usually do my analyses using TradingView. In this strategy, we will use 5-minute candles and add 2 indicators to help us. Our first indicator is the simple moving average, SMA. The SMA helps us determine the trend direction by calculating the average price over a given period. Now, let's move to the euro/dollar pair. Let's add our indicators and take a look at our strategy. Firstly, let's add the simple moving average to our chart. We click on the indicators section, type simple moving average in the search bar, and when we click on it, the indicator is added to the chart. You can also add it to your favorite list by clicking on the star icon next to it. I am showing it again from the beginning. After adding the simple moving average, let's edit its settings. Hover over the indicator name in the top left corner, and the settings panel will open. Change the input section to 50. You can also change the style settings if you want. This is how I use it. I am showing it again. Our second indicator, stochastic. Now let's add our second indicator. We click on the indicators section again, and this time we write stochastic. When we click on it, the indicator is added to our chart. We set the stochastic indicator like the SMA. In the input section, let's set the values as 5, 3, 3. Then in the style section, let's change the upper level to 70 and the lower level to 30. Showing again. Stochastic helps us to identify overbought and oversold zones. For example, when it goes above 70, it indicates that the price is too high and a pullback is likely. Conversely, when it falls below 30, it indicates that the price is too low and a rebound opportunity may arise. Setting candlestick charts as Heikin Ashi. Finally, we need to change our candlestick charts to Heikin Ashi. This chart type helps us to see trends more clearly. Briefly, let me tell you about these indicators. Simple moving average helps us determine the trend direction, while stochastic makes it easier to see overbought and oversold zones. You can use this strategy on many instruments, but don't forget to test it first and review its history. And never forget, no strategy guarantees 100% success. If someone says otherwise, they are lying. Now let's start looking for positions suitable for our strategy. Position opening strategy. First, let's look at the trend direction. If the price is above the 50-period simple moving average, it's a bull market. If it's below, it's a bear market. Since this strategy is trend following, we should not open positions against the trend. For example, here the price is below the 50-day simple moving average. What should we think here? Of course, sell. Let's look at how to enter the position by understanding our strategy. After we realize that the trend is downwards, we will wait for a pullback. This is where the pullback takes place. When we see the pullback, we immediately look at the stochastics. Has it gone above 70? Has it gone up here? Yes, it has. Stochastic above the 70 level increases the possibilities for us. Stochastic above 70 is important because we are in a selling position. Let's move on. We need 2 Heikin Ashi candles with consecutive sellers to determine our entry position. We should enter at the opening price of the third one. So we should open our position here. After opening our position, we set our stop 1 or 2 levels above the last high and set our take profit at 2 or 2.5 times our stop. But there is one thing we should know. No strategy can profit on all positions. Of course, there will always be positions that we lose, even consecutively. What we need to do is to enter positions in the right places by sticking to our strategy and make profits on average. But it is important to remember that after a retracement in a sell position, there must be 2 consecutive candles with sellers so that we enter the position at the opening of the third. This is what our strategy requires. Let's move on. Here again, we look at the simple moving average to determine the direction of the trend. The price is below the simple moving average, and we will consider selling again. The stochastic level is also above 70. 2 Heikin Ashi candles with sellers have appeared, and we should enter a position here. Let's enter. Let's put our stop 1 or 2 notches above the last top and see the result. Unfortunately, we lost here. But losing is not the end of the world. If we have a normal strategy, and if we enter positions in accordance with the strategy without losing our shares, we will definitely gain on average. Now let's move on. I would also like to remind one thing. If the price is flat, do not open a position. Wait for the price to break out of the horizontal and be in an uptrend or rear downtrend. Because our strategy is a strategy that we can win in the direction of the trend. Here, the price broke the support, broke out of the horizontal, and started to continue the downtrend. Then it gave us an opportunity. Let's say we missed this opportunity or didn't want to make sure that the support was fully broken. Then let's look at the position that formed. Here again, the price is below the simple moving average of 50 candles, and a retracement has occurred. Stochastic rose above the 70 level. After the Heikin Ashi candle with 2 sellers, we open our position here. We set our stop above the last high, as in previous positions, and set our take profit at 2 or 2.5 times. We took profit again. Remember, even if we lose, we can still gain, on average, with the normal strategy. So, how does this work? Let's talk about the positions we opened. We opened 3 positions, we made a profit in 2 of them, and lost in 1. One of the most important things in Forex is risk management. For example, if we lost 2% on the position we lost and gained 5% on the 2 positions we won, we would have an average gain of 8%. We can show hundreds of examples of such positions, both profitable and unprofitable. To be profitable, we have to accept that. Otherwise, we cannot manage our psychology. Not all our positions have to be profitable to make money in the market. If we manage the risk correctly, we can make very good profits with trades that win 50% or 55%. I will make a detailed video about risk management and position size in the coming days. If you don't want to miss it and would like to see more videos, please subscribe to the channel and turn on notifications. Take care of yourself